Hi, and welcome to another daily recap. So, today I'm going to recap December 2, 2024. So, this is a fresh month and it's a fresh week, and we are starting off the December. And to start off, we are having a high impact news at 3 p.m. So, which is out of my trading session because my trading session would be from 7 a.m. GMT plus 1 to 15 to 15 GMT plus 1. So this is exactly at 15. So at 15, even if the price moves rapidly, I will not be trading the session because that would be out of the session. Even 1 minute after 15, I will not be trading. So you need to be a restricted trader in order to be a profitable trader. So that's what I'm doing currently. So no need to consider any of this. So let's jump into the charts and look into the technicals, not the fundamentals. So starting off with Euro USD from the daily perspective, we can see that the swing structure is bearish. Internal is also bearish. So zooming in, we can see that the price had made a strong rejection of the demand zone and it has mitigated into the extreme supply. So now the price had swept the buy side liquidity and it has chalked bearish, and now it has formed the new supply. That's why I didn't mark the supply, because we are having a new supply from which we can look for sells. So that's why the daily bias is clearly bearish, because there is a buy side liquidity sweep and there is a displacement. So these two factors combined will provide me a powerful confidence that the price will move in a particular direction. So in this case, there is a buy side liquidity sweep and there is a displacement in the downside, which means shorts are very much high probability today. Jumping into the 4-hour chart, so this is the swing structure where you can see the swing structure is bearish. Internal has now shifted to bearish because in the daily it is chalk bearish. So more often than not, the fractal structure in the daily will be equivalent to the internal structure in the 4 hours chart. So that's what here. And adding to the cells, there is a ton of sell side liquidity here, which you can see. So this adds to the cells. So price can just rally down and take out all these low resistance liquidity and eventually this weak internal low. So that's why the shorts are very much high probability today in the EU chart. So there is this demand here from which the price can react from and then take out some buy side liquidities, which we'll see shortly the game plan. So this is actually the H1 chart. The swing structure is bearish, internal is bearish, which means that the phase is A, that the market structure is in phase A, which is the pro swing pro internal phase, which is the highest of highest probability conditions for taking trades. So a price had mitigated into this H1 demand. So now what I can expect, a small bullish reaction to trap the buyers who are trapped into the wrong side of the market and then push down, or price can just push directly down and it can create a small reaction and then push down, which can create a flip zone. Then I can look for shorts from this flip zone and then continue taking shorts till the price reaches the swing low. So that was the game plan. And yeah, as expected at 7:17 GMT plus 1, price made a small bullish reaction and then pushed down. So obviously what you can expect is this could be the PY from which I can look for shorts and then target the weak internal low, sorry, the weak swing low. It's as simple as that. So this is phase A, high probability condition. So high time frame supporting the medium time frame idea, definitely. And medium time frame POI as more than 4 out of 8 criteria being met, and it is in line with the medium time frame order flow, and it is an OTE. I think this box, I think it needs further clarification, because the price is an OTE. In what OTE? Whether it is in swing structure OTE or in the internal OTE. If it is this swing structure OTE, then this box has a tick. But if it is an internal structure OTE, then this box cannot be ticked, because this is the internal structure. So this is the internal structure, and the price this POI is just uh, you know on the verge of the internal structure. So this is not in the premium prices. If this POI was somewhere here, so then I could consider this as the OTE point. So maybe you will see what happened to this trade later on, but currently I'm saying that this box could needs further clarification, because till now I was using swing structure OT in some cases and internal structure OT in some cases. Now I need to solidify this one. So from the next video onwards, you will see this solidification actually. So yeah, actually this POI was formed by flipping this demand. So this is a beautiful flip zone which I can look for trades. And yeah, what are the other confluences? There is no opposing demand zones, and there is a structural liquidity to target, that is the weak internal low, and there is a lot of low resistance liquidity that I can target. So what are the risk factors? It did not sweep the Asian ice, so that is a risk factor to be considered. And it was having a beautiful lid, M15 lid, so I'm happy. If the price takes out that lid, then I'll be taking shots. And yeah, actually price made another lid here, so I placed my first order right here. I was in a bit of FOMO while placing the trades, because it was phase A and it is very rare to get a phase A trade. That's why I was in a bit of FOMO. So that's why I used this lid, and I know this is a high probability lid, but still I used this as my first lid. But price did not tag me in. It went rallying up, and there is a fake chalk also formed. There is a fake chalk also formed, so there is a pullback inducement, and there is a high probability lid is also being taken, and the price has also filled in some imbalances. So after taking the internal resistance liquidity, what will the price aim for? External resistance liquidity. And with this low resistance liquidity, I can look for the price to rally down and take out all the sell side liquidities. So high probability condition, high probability scenario, high probability low time frame entries. Perfect setup. But unfortunately, I became the liquidity for the market. The price actually tagged me in, and then rallied up and took out the buy side liquidity above this high. So one thing I must consider, that from the H1, if you see this candle does not have any inducements. So that's why from the H1 perspective, this does not have any inducement, and the price just took the buy side liquidity above this candle. So it is what it is, though this candle just swept buy side liquidity and made a huge displacement down. Sometimes phase A does not sweep buy side liquidity, sometimes it can sweep buy side liquidities like this. So this is forex market. You can't expect always your strategy to play out, and this time price took the buy side liquidity and then it started to push down. And one more thing is that I placed my order during the New York lull period, the London lull period. So this was another mistake that I did. That's why I just got stopped. Maybe that's why I just got stopped out. The wise thing that I should have done is wait for the price, wait for the New York to open, and then I could have entered shots. But since this is phase A, I was in a rush to take shots. That's why I just overruled myself from that one condition, and I just took a loss. And the worst part is, I failed to place the correct lot size. Instead of placing 1% risk, I actually placed 2% risk. So I actually, once the price moved down, I actually reduced the risk, but instead of losing $33, I lost $66 because I placed high risk. So yeah, it is what it is. Like I just fine tuned the lot size calculator. Now it's working good. And yeah, price took the buy side liquidity and it started moving in my direction. So once the price took out this buy side liquidity, this was my new POI, H1 POI, and this was the perfect LC2B. And I waited for the price to take out the buy side liquidity and then push down, but it just rallied down and it went in my direction. It is what it is. Like, I know that the price is gonna move down, but I was not able to capitalize on the move. So that hurts more than getting stopped out. Okay, jumping into GU. Let's see what happened on GU on this day. In GU, the swing structure is bullish. Internal is internal is also bullish. So now it is contradicting the EU as well. Now it is contradiction in with GU. So in GU, you saw a bearish bias from the daily as well as a bearish bias in the 4-hour time frame. But in GU, you can see that there is a bullish bias in the daily, which is contradiction in with EU. And one more point you must note that the EU and GU is a correlating pair. So if you mix all these 3 points, you will get uh, you know you will get confused and don't know which direction that EU is gonna move. So that's why what I'll do personally is I'll just trade EU as well as GU as a separate entity. I'll forget the concept that EU and GU is a correlating pair. So this is just for you, and this point just came out of experience. So yeah, price actually made a bullish IBOS, so which means, but there is a chance of price coming down. Why? So there is nothing to the left and there is only this sell side liquidity. So price can push further up and take out this buy side liquidity. So once the price takes out that buy side liquidity, it can push down to take out this sell side liquidity and mitigate into this daily demand zone. And this demand is a high probability demand because it was built with a sweep of liquidity. It also has an inducement as well as a displacement. So this is a very high probability demand which the price can mitigate and then push the price up. So definitely I'm expecting the price to push down. So that push down is sufficient for me to take shorts and book my profits. It doesn't always need to be, the price needs to mitigate into the daily demand, daily POIs, and then we must see displacement in the H1 and then we must trade in line with that one. It's not necessary at all. If I know that the price is going to come to a particular supply or demand zone, then I can look to play in that direction. So jumping into the 4-hour chart, and here you can specifically see the price has mitigated into the 4-hour supply, though there is demand below that, but I'm expecting the price to push further down to mitigate into the daily demand. So zooming in, here you can see the 4-hour has built up some low resistance liquidity in line with the weak internal high. So the longs would be high probability because price can just sweep the sell side liquidity and then push up and to take out the low resistance liquidity as well as the weak internal high. So what about this daily demand? Probably next time. From the daily perspective, this demand seems mitigatable, but from the 4-hour perspective, it seems that the price can mitigate the daily demand some other time. So depending upon the time frames, your bias may vary. And jumping into the H1, you can see the swing structure is bullish and the internal is also bullish. Here you can see the low resistance liquidity and the price has mitigated into the H1 demand zone. So now what I can expect, if the price takes out the sell side liquidity and then pushes up with a strong bullish momentum, then I can look for longs targeting the weak internal high as well as the low resistance liquidity above. Here in the 4-hour chart, if you see, I was expecting the price to take out this sell side liquidity, but that sell side liquidity is down below. So if I move into even lower time frames, uh, I won't see this sell side liquidity. I'll be seeing sell side liquidity somewhere in this area. So the more minute the time frames you go, the minor more minor liquidity pools that you will target. So that is a classic. So this one is a classic, very much classic example. So this is actually the 4-hour sell side liquidity, and this is the H1 sell side liquidity. Now I'm expecting the price to take out the H1 sell side liquidity and then chalk bullish, which may confirm that the price can go up and there is nothing to the left from which the price can react from. So all this is, formed during the lull period, and there is no orders, there is no pending orders here, and the price can just rally up and take out the low resistance liquidity as well as the weak internal high. So zooming in, proceeding with the charts, here you can see the price has swept the sell side liquidity and then it has chalked bullish. So ideal condition for me to take longs. But there is a small catch. This 10 a.m. candle, I just waited for it to finish, but this ended up being a liquidity sweep rather being a chalk bullish. So what is the difference between a chalk bullish and a liquidity sweep? If there is a candle closure, I could have considered this as a chalk bullish, then I could have taken the trade. But since it's just a liquidity sweep, I just waited for the 11 a.m. candle to finish printing to confirm that there is bullish intent and then take the trade. So at 11 a.m. there was a strong bullish intent came up. So phase A2 now became high probability. Then now I can look to target the weak internal high as well as the buy side liquidity. Still, you can see that this GU longs is contradictory from the EU shorts. So since I'm trading both EU as well as GU as a separate entity, I did not fear to take longs while taking shorts in EU. So you must have that bulletproof mindset when you're trading two correlating pairs. Suppose if you have one pair as your main pair and another one as your correlating pair, then it's not an issue. For example, I used to have euro dollar as my main pair and DXY as my correlating pair just to check the SMT divergence. If that is the case, I take only the trades on EU and I'll just use DXY to check the SMT divergence. But here both EU as well as GU are my main pairs, so I can't say that EU is going short, so I can expect GU also to become shorts. No, I'm trading both EU as well as GU as separate entity. That's why I'm not afraid of taking contradictory trades in both EU as well as GU. Hope this stays long for me, and at any time I could make one pair biased more over the other pair. If that is the case, I'll just inform while recording the session. So price took the sell side liquidity and chalk bearish. So this is a perfect conditions for A2. The only negative is the price is reacting off from the 4-hour supply. So anytime the price can anytime the price can start to push down and take out the strong internal low. But apart from that, it is a very much high probability trade, and there are ton of confluences supporting my trade. So but entry method is LC1 with H1 lid. So there is a lid here and there is also a lid here. So whichever lid the price takes first and mitigates into the POI, I'll just take them. But unlike the EU, which gave me a fake reaction, GU was better, which because it did not give me any fake reactions, and it just started to rally down and invalidated the POI. It is what it is, and this became a breakup block and price pulled back into the breakup block and then started to rally down again. So I don't trade the breakup blocks, but in future if this breaker blocks seems much more higher probability from which the price is getting inflated from, then I'll start to look those breaker blocks. But for now, I'll just use supply and demands as my order blocks and fair value gaps as a liquidity pool. That's it. Breaker blocks are not my piece of my cake. So yeah, this is a EOD. Came to the session with a bullish bias, but I was totally in the wrong direction. EU became the correct pair which moved in the correct direction. So anyway, I didn't get any trades on GU, and luckily he escaped from a loss from GU. I predicted correctly in EU, but I took a loss in EU. So yeah, it is what it is. Like you can't expect justice from market. You can just accept some random gifts that is provided by the market. So in this case, I didn't get any trades on EU, and I took one loss in GU. So in EU. So yeah, it is bad to it is not a good psychology to start my 2025 trading. Sorry, this is not 2020. Sorry, this is not a good way to start December 2, the fresh month, as with a loss. Actually, I took a loss in Jan 2, which I'll post later. So December 2 also I took a loss. So it is what it is. Like, just need to move forward and keep doing the same thing again and again. So that's what matters the most. So yeah, thank you guys. That's all from my side. See you on the next day. Until then, cheers guys. Bye.